How's everybody doing? Welcome, welcome, welcome. I hope everybody's had a great weekend. So this is 50 pips, 12th of May, 2013. I'm not making any trade calls or recommendations. You and only you are responsible for the trades you may decide to take. The fact you're listening to this means you've read, you understand, you accept all the disclosure disclaimers here on the website, understanding that we're just performing some technical analysis for some learning, context, and educational purposes only. So what's going on today, guys? Just going to try and keep it sweet and simple. Going to focus on FX pairs today. So a lot of people wondering about the Aussie, what's going on in the Aussie. I think the most interesting chart is really the weekly. A lot of people talking about the trading range we've broken out of, and basically that's, this tight range we'd been in for a while, okay? The bigger picture is that we're still consolidating at highs. And what's very interesting, I think, is now how we behave around the parity mark, okay? If you remember, this is a 200 moving average on a weekly chart. So we've got that 200 coming down on the weekly, which is going to be very interesting. You on more sell-off, you want to keep a very close eye on this to see how we behave if we close above or below at the end of this week. That's going to be very important. Broadly speaking, below day closes this week below the parity mark are going to be pretty heavy tone. Any kind of day close above, well, we could see a little pop. As you probably remember, what we said is when we once we broke below the 200-day moving average, we said pressure on here. So the shorts are going to try and press this, and once we broke below, we said market is likely going to find a bit of a bid tone, basically a little bit of a retracement, and then it's all going to be about the 200-day. If the sellers are there, if the sellers are in full force, they're going to want to keep the pressure on, and we're going to sell and keep daily closes below that level for the next press down. And that's exactly what we got. Now, it looked like it was trying to base at a certain point this week, but it just broke completely through, came into the parity. Not surprising to see profit taking. So again, I think in terms of the weekly, should we keep on selling below the parity mark? Keep an eye at the 200 on the weekly. That's going to give you a pretty good steal for Momo and for flows, especially to see how we trade and close the week, but also during the week. Interim on the daily chart, what I would be looking at in terms of levels is to the downside, these 99.10s. To the upside, any kind of bounce. Look at what's going to happen here at this old previous support that now should act as resistance if the sellers are going to press this, and that's 101.40s. You can call it 101.50s. But basically, keep in mind that all these levels to the upside are going to be resistance for the shorts continuing to try and press this. And even though we get a bounce, as long as we hold below the 200-day, this is going to be pressure on. But again, don't be, after such a move, don't be surprised to see some kind of bouncing, especially on a Monday. I don't know how it's going to open here. I don't have it on my chart. But again, interim, short-term, parity is the mid-range. We got 101.50s to the downside and 99.10s to the downside. Keep an eye on how we behave here on daily closes around the parity mark. And then don't forget to keep an eye on that 200 on the weekly, okay? Yen, a lot of people asking about yen. I really don't want to waste too much time on these. You can go back. We've discussed these at detail. We got a print into the 101.60s, which we were looking for last week. Last Sunday's what we said is keep in mind it's all about these 98.50s. We have a 98.43 line. As long as this starts to base and we couldn't get any daily close below this level, we're looking for this to continue to rotate higher, take out the 100 level, and print 101.60s. Just a reminder, bigger term targets, we've got 103.60s, and then 105 is our final target, which we've been looking at since the pretty much 70s marker, okay? Going into the week, most naturally, this old resistance acting as support, so 99.90s, you can call it the 100 to the downside, 101.60s, mid-range, and then 103.60s, okay? EJ, exactly the same thing. As I said to some of the guys, I'd much rather get long Euro JPY than USD JPY for those 132s. We got a nice move. That's done. Just a reminder to the upside, our next target is 135.60s. It was very interesting here, but extremely technical, right? We kept on getting sold into this descending trend line. And then we broke above. We just messed around here, very choppy, but we held these rows, then we moved back above previous resistance, acting as support. Nice little confluence here, and bam, we got the final move. Going into the week, mid-range now will be 132s. I look at bottom end of the range, pretty much I would call that this breakout level down here, 130.40s, and then upside 135s. Okay. USD CAD, we finally got the move back down. Now we were looking at, and you can go back to all the recordings for quite some time since the 0270s, we're looking for a move back into the 200-day and the parity mark. As I said, I believe on Twitter too, I can't remember because we do so much stuff during the week, but I said, you know, if you're holding that short and you got that very nice move and you're going into those 0010s, the last pips can be the most expensive. So you don't want to be stubbornly hold to a full position. Of course, you would have managed that all the way down, but you don't want to hold it when you see bids coming in ahead of that parity mark for the last 10 or 15 pips, right? Even if you look at it on a 4-hour, or you could look at it on a 1-hour chart, right? When you've been in such a big swing and you see clearly pairs having trouble basing here, the last pips can be the most expensive. You don't want to hang around for the last 20 pips. That's really not a good idea. Now, on the daily, what's interesting here, as you can see, is that these are the levels we've had on our chart for a long time: 0270s, 0150s, 0060s. And now this is being very technical. So we see profit taking, protection of the one. We come back in, and where are we here? We're right at that previous support, acting as resistance. By the way, the 0150 sold pretty much to the pip. Now, if you want to have a fib on there, you can look at the fib of the most recent move down from highs to lows. You see the 50 back smack getting sold right ahead of that. That's the protection trend being protected, okay? So going into the week, what you want to watch at now, this becomes top range 10150s. We've got this, I would call this now mid-range, the 0060s, and the low range is going to be into this 200-day and these 99.50s. So this is what I would be looking at. I'm going to get rid of this to make it a bit clearer. The three circles are mid, low, and high. So again, going into this week, as long as this high range holds and you can't get any daily closes above, then expect this to try and come back and continue and probably go for that parity and for that 200-day and 99.50s as a target to the downside. That's also the 123 extension of this level that just got sold. Should we start to get daily closes above the 0150s, well, then I'll be looking at this to potentially start to sideways chop for a bit and then maybe even try to rotate back into those 0270s. This is really the key marker for me going into the week, okay? Kiwi, again, I'm on a daily here. You could see we're holding right at that 200-day. Buyers coming in, supporting that. Remember we talked, there was a point where it looked like it was trying to build a bit of a double bottom here, but remember what we said, and we've been going on about this level for ages, these 84.70s, and even last Sunday we said, pivotal level, bull bear line, keep an eye for daily closes above or below. It's a really big bull bear line, right? Held below, pressure's on. Going into the week, we're hovering 82.70s right here. Now, to the downside, well, first of all, keep an eye on how we close daily below. Daily close is below the 200-day. Keep in mind, haven't had a daily close below the 200-day, and this is arguably could have been a fake out pretty much since August 2012. So it's going to be an important level, okay? 84.70s top side remains. Bulls really need to get a daily close above there to get some bullish Momo back. Otherwise, now we've got this mid-range is coming in right here in this middle where the 200 days coming in. And then bottom end of the range, bottom end support is going to be 81.80s, 81.30s, okay? So that's what I'm looking at. Really, this 200 days going to be in terms of daily closes above, below will likely be key for momentum and for flow. So I'd really have that up on your chart, especially on daily, to give you a bit of a feel. cable. What's going on cable? So cable, we were looking for this to pop back up, and we were looking for this to come back into those 55.80s. I said last week I was actually looking for this to try and move back into the 57.60s to get a bit more of a bid tone going. Now, why was I saying that? Well, first of all, I said you had to respect that we were right back into the 50 back, the initial target we were looking for. And if the shorts wanted to come in and the shorts wanted to keep the pressure on, this is where they had to hit it, okay? And effectively now, with hindsight, this is where it got hit, okay? You don't have to be a rocket scientist to see that. Basically, our discussion was, and you can look at it on a 4-hour, or you can look at a daily, but what I was saying, usually when these 50 backs get a lot of momentum and they work really well, you see price moving away from them quite quickly. And what we saw here, we saw a lot of consolidation here and price being stuck at this 50 back for quite some time, even with some positive daily closes here. So it looked like it might want to take up some more upside. Now, it couldn't take those highs. That initial pierce through the 50 back actually held. So very nice setups for the shorts that were playing this. Needless to say, I wasn't trading this. I was looking for this to go a bit higher. Now, what's going into the week? Again, this is the massive level to the upside. You can look at it on a daily 1, 2, 3, 4, 5, 6, 7, pretty much 7 touches. This is 8 days where we couldn't close above. So very, very aggressive. This is the top side level. And now in terms of bottom side of the range, you can look at it on a 4-hour. You see we have all these little yellow circles here. How important it was every time we came back down. This is a very important historically resistance support line, but most recently, once we broke up, how aggressively the 52s got defended. Okay, so that's the downside for me going into the week. This is what so for the bulls to have a shot again and to be back in control, I need to see a daily close above 55.80s. Okay, for me to say that the bears have firmly got control of this again, I need to see a daily close below the 52.00. Okay, some people will be looking at the 50 back of the most recent move from lows to highs. You can see that 50 back is coming in around the 52.00, so we've got some confluence there. Then another thing to look at, which is also interesting in order to just give you a feel, is if you look at, channel up, what's happening is we're basing, buyers are coming in right ahead of the channel. Remember we talked about the 53 to 52 level being so important for so long, especially the 53 on a weekly. It was really important, pivotal for action for a long time. So that's going to be an interesting level. I mean, I can't call it mid-range because of course mid-range is going to be around here, but if I'm saying 3 levels that I'd be keeping an eye out for, these are pretty much the levels I'm going to be focusing on for this week, okay? And we really need to get close below the 52s to be bears fully on, close above the 55.80s, bulls fully on. Right here, I think this could be a bit of a chop zone, so we'll have to see how we behave going into the week inside this area, okay? And last but definitely not least, what's going on with euro? Well, what's going on with euro? Much to do about nothing, really, even though we've got moves. So remember what we've been discussing, and we've been discussing this for ages, right? For a couple of months almost, or at least a month. And we've been talking about how, and you can go back on the other recordings, how we've got a big swing short, 50 back short setup, a big swing long setups here. But effectively what we said is, no matter, what the bigger picture, the longs looking for 34s and 40s, the shorts looking for a move back into 120s, 118s, what we need to see a resolve is we need to see a resolve around this sideways chop range, okay? Now, it doesn't mean you can't trade. It doesn't mean you can't make money. It doesn't mean you can't lose money inside this range. But you have to realize that this is a sideways chop, right? And that the market is uncomfortable so far finding or isn't finding enough Momo and flows to break and hold outside of this area, right? And what we've been saying is we need to see, or at least I want to see, a daily close above these 3120s, 3180s for the bulls to be fully in control, or I want to see a daily close below the 30.00 into 29.50 for the bears to be in control. And even though these ranges have been very tradable, we've had a lot of trading opportunities so far, we still haven't got a close above this level, and we still haven't got a close below this level. So to a certain extent, much to do about nothing unless we get a break outside of this range. And by that I mean I want to see a daily closes outside this level. Okay, so going into the week, what I'd be focusing on now is how we behave around the 2950s. Okay, so daily closes above the 2950s, as far as I'm concerned, we could very easily, well, I wouldn't be surprised to see a move right back up into 130.50s, but again, still on for a move back into high range. We get a close below those 129.50s, then this is going to be pressure on, and I'm going to be looking for the market to try and take a stab at the 128 level potentially. So this is really an important level. That's what I'm going to be watching out for, and that's going to be my focus. Now, clearly, there's some other support and resistances to the downside. Let's just move this down. Well, you can see here we've got all this previous support that acts as resistance here, coming in around the 2860 level, 2870 level. That's going to be interesting, but clearly it's a very big level around the 129.50. So keep an eye to see how we behave. But again, don't be surprised if this trades in range, right? Well, you shouldn't be surprised whatever happens, but we really need to see a break outside of that range. And so I think it's going to be an interesting week. We've got a lot of UK data, more interesting, coming out. So that'll also be interesting on cable. And this is what we're looking at on Euro, okay? So try to keep it short and brief. I hope everybody has a great weekend. I hope everybody enjoys this. If you like it, or if you enjoyed it, or if you find it useful or interesting, don't be shy about sharing it. And again, I'll see you guys tomorrow for London Open. Have a great one. Take care, and thanks for listening. Bye-bye, guys.